Hello and welcome to my this week's video. All the traders and crypto enthusiasts and people who just like to watch me because I can be quite funny sometimes. So this week, in light of the recent events on the markets when like everything, people were just like, oh, like this is gonna go up, this is gonna go up, and like most of the cryptos like took a dump and went down like 50%, at best 50%. And I don't want to be one of those people who will be, calling like, oh, you stupid sheep and like you dumb people and you will never be successful. No, no, no. I think you will be successful even if you're like hodling right now. I just want to sort of like be of service to you and maybe give you this moment, like opportunity to wake up and give you my opinion why I really believe and think that hodling is dumb. And this is why. Well, now my drawing comes in, so those of you who joined in because you love my drawings, here we go. So first of all, it breaks the most fundamental rules of trading and investing. What is that? That is that you know when you're taking a loss. So for example, I'm buying a coin at like $1, and when it goes to 50 cents, I need to exit. Like that's very simple. Like $0.5, I have an exit. Once again, I don't know how to make this money simple. This is ridiculous. And also when to take profit. Like all the people who are like investing into the startups and everything, they always have like, okay, like when this goes this way, like this is where I exit, and when this goes to, let's say, $2, that's where I exit as well. So these are people who are actually creating wealth doing this. This is how they approach it. They don't go like all in and they don't go all the way up. They always have like, okay, like I go into this company, now it's valued in 1 million, and I'm not going to be waiting till it's going to be valued 100 million. I'm just going to exit at 2 millions. And it's same in the trading, the same principle of trading. You need to know where is your exit, where is your take profit. HODLING, as we can see here, is like, I think it's like a shortcut or acronym for like holding on for your dear life or something like that. So that means no matter what you're holding. And that's just like really ridiculously stupid action, because then you actually can go to zero. So that's something that can never create wealth. That's like a pattern of behavior that eventually is going to cause you to lose money, to lose wealth. You will not create wealth. You can make money once, twice, but eventually you will lose it. So it's a pattern. It's a pattern that inevitably leads to you losing your money. Number two, you never consider the other side of the coin. Like people are just like, yeah, they just look at the potential profits. You always have to look at the losses and be like, am I really willing to take this loss? And usually you get married to one side of the coin. And this is the most dangerous part. And this is like the community of holders. This is like such a toxic environment. And it's exactly like, if you went to high school and you were doing stupid things, like you went out and, you got drunk or whatever and like did it with a group of friends, somehow it felt better because, yeah, you were throwing up there and, James was throwing up there. And Tim was, I don't know, like sleeping across the street. And somehow, if you're doing something really stupid in a group of people, it feels better. And this is exactly what are the Telegram groups for the holders. Like you are doing something ridiculously stupid, but you're in a group of people. So somehow it makes you feel better that, oh, I just lost like, I don't know, 20,000, but I don't know, like Raging Monkey 224 also lost 20,000. So it's kind of okay because we're into this together. But is it really, like are there, like I don't know. It's just like that sort of like tribal sort of mentality that leads to hell. And like these people are always married to the one idea that it really has to go up, really has to go up, really has to go up, and it's gonna happen. And like just look at the data. Like people are telling this about Ripple for 3 years now, and it just went to hell. Like it's not gonna go to anywhere. And also, like some of the coins are not gonna catch up. Like I think we're still in the stage of the bubble. Like yes, cryptos, metaverse, everything is real. But just like in early 2000s, you had like 50 websites, which sort of where you put your date of birth, and the website gave you recommended name for your puppy, and there was 50 sites for this. Like, this is where we still are with crypto and metaverse and web3. Like, there's a lot of crap that's gonna go to the zero. So please consider this. Like, please consider this. Like, are you aware that this coin, this like shit coin you're trying to find, can go to zero? Because usually hodlers are really want to get into something that is like really low, and they want to get a lot of it. So that means some projects that are very risky and they can really go to zero, and somehow staying in the group of like, you know, like-minded people who are doing like these stupid actions, you're all happy because, you know, like, oh, I know better because this coin is just going to go up tomorrow. This coin is just going to go up tomorrow. So this is your little group. But what they don't know is that they all wearing the dummy hats. I don't know if you know what it is. It's like in the cartoons, it used to be a thing, like person wearing a dummy hat, like with the D on top of it. So basically, this is what all these like hodlers, Telegram, Discord channels are. Just groups of people doing something stupid, feeling better about it. And my point number 3 is like hodling and cryptos. Like, this concept is not anything new. Like, basically crypto, I would say, is like a same thing, like getting a small piece of the company who's behind it, of the project. So instead of like issuing shares, you're issuing coins, which sort of represent, which sort of represent like how is your company, how is your project doing. So, and this has been around for ages, like, you know, like penny stocks and everything. This has been around for tens and tens and tens and tens of years. And untrained people always fail to create wealth while doing this. So really, you know, like when people ask me, oh, you know, like somebody who's not into crypto, and they give me like advice, they ask for advice, like, instead of like, how will I learn how to trade? How will I learn to create wealth for crypto? It's just like, oh, can you just tell me what coin can I buy? And that's, you know, I would say it's like a same question as if you would be a surgeon and somebody come to you like, hey, I just want to do like a weekend sort of like surgery of my appendix. Can you just give me a couple of, you know, quick tips how to do it? And you're like, well, I really don't know. This is not going to end well. So somehow people think that this is something that is easy, but stocks and penny stocks already showed us that like untrained people always lose money. And once again, please look at your portfolio now and use this as a wake-up moment. I really want to, you're not dumb, you're just like, you just didn't know, you know, like you just didn't know, you didn't know better. So maybe take this moment to acknowledge like, yes, I'm in the group with these people doing dumb things. I have no idea when I'm getting out of this project. And yeah, people never created wealth doing this. They can create money, but you can create money in casino, but you will never create wealth in casino. Like, I mean, if you go there as gamble, of course, casinos are creating wealth for themselves, but the gamblers, yes, they can make money. They can go there and like one of them is gonna get 1 million. But this pattern of behavior will always eventually lead you to losing money, therefore never creating wealth. So this is my drop of wisdom about the hodling and why I think it's completely dumb. And now let's look how my strategy and trading performed while the markets took like 30 to 50% dump last week. And now let me show you how did my day trading strategy perform. I will, you know, not to bore you with the details, and also like if you don't trust me, if you think I'm trying to, you know, lie to you or, you know, show you something that's not real, well, then stop watching me. So I will just show it to you on the one pair as an example so that you can see that it works, and that is Luna. And what I showed you last week, the zones, like where we're gonna be trading my strategy, which I also told you that it's just like taking engulfing and pin bars from these zones, which I showed you last week. Well, have a look at it. Like one entry, another entry, another short because we're below the zone. So here, take a short, another short, which would go to 5. This one would go to 6R. Another short, which would go to 1.7. This is a losing trade because we got here and we have engulfing, which doesn't go anywhere. Then we have another winning trade, which goes to 4.9, another winning that goes at least to 4. It would go even higher, but the point is I don't use these maximum numbers, how far did it go. I always take profits at 3 to 1. So basically, this is just for fun. Maybe if in the future I decide to take profits elsewhere, but I'm just measuring like if it gets to 3 to 1 or not, and like how far does it get. Then we have another trade, 1.9, losing trade, another winning trade from this zone. Look, I have a engulfing, boom, 5 to 1. You just get 5, but still you get 3% on this kind of trade. I don't want to be telling you get 5. Yes, you could, but with my strategy you get 3. This one 2.3, so that means we would get out at break even. Then there's another trade, 1 to 1, losing trade, another winning trade, which would actually go really far, but we're taking profits at 3 to 1, so we don't care how far it goes. Another winning trade, which goes also really far. Maybe it could make 10%, but once again, we don't care because we take profits at 3 to 1, because I don't like to have big drawdowns. I like to have profits nicely secured. So, and now let me show you what I did. So I do this with every single pair. Every week, and these are the statistics. I hope you can see it well. Can you see it well? That's a good question. Let me make it bigger just in case you can see. So these are all and I had a rule that I'm taking. This is Luna, by the way, all the trades that I'm taking trades at 3R at break even, because this is what my statistics shows me that is the best within this month. We would make 38% just on Luna taking like this. And then here I have like all the trades which are on the chart as I was showing you. However, if they don't have the S marking, that means that after I move stop loss to break even, after reaching 1 to 1, it got back to the entry and I got stopped out. So that's why I don't give out when this is like statistics for 3R at break even. Even though the trade went to 6R, I give myself 0, 0, 0 because it went back to the entry, therefore it got me out. And here is like the number. So basically last week, just on Luna, we would make 12%. Of course, it's not pure 12, if you're risking 1% per trade. Of course, it's not pure 12% because we have 1, 2, 3, 48 till 61. That's like 13 trades. And each trade is taking 0.15% as a fee. So basically you would make something like 10.5% in reality. And with Phantom, last week also we had a rule taking 3 to 1 with moving stop loss to break even. That would make 8%. On Mana, we would make in last week 9%. In Kava, 16. No, in Kava we are actually taking set and forget. We're not moving stop loss to break even. So therefore, I won't lie to you, it's not this number. This is the number that we would get on Kava, 12%. And last is Atom. Atom didn't have a lot of trades, which is great because not a lot of fees, but they were extremely successful. And we're taking 3R, moving stop loss at break even, making 15%, 15R just on this coin. Now for clarity statement, I don't want to misguide you. Are you going to make, so this makes up for like, I don't know, 45%. Like you can add up these five numbers I just told you. It makes up to like 50% profit in a week while the market took dumps. Are you really going to make 50% with this strategy? Well, if it's not automated, no. Like you're going to be very happy to make 10%, but per week, that's still amazing, you know? So I don't want to tell you like, oh, you will be making 50% per week. No, because you will miss some trades. You have to sleep. So even if you would be behind the charts like 16 hours a day, maybe you would make like 20, 25% a week, but that's still pretty amazing performance while the markets are taking the dump. So these are the real performance, real numbers. I can show you chart by chart. I have no intention in misleading you. I never want to hurt people with my trading or trading education. So these are my trades. I mark all the trades from the past week on the charts, then make these statistics. And you can ask yourself like, hey, do I want to be market dependent and take a 50% loss when the markets are taking dump, or I can day trade and make around 10% per week just day trading. So yeah, that's it. That's pretty much all I have for this week. And I'm looking forward to seeing you in the next video next week. Bon voyage.